At the weekly news briefing to announce cabinet decisions, it was revealed that state tax revenue of the first 9 months of 2023 increased by 51% compared to the year 2022. However, tax collection targets agreed with the International Monetary Fund had not yet been accomplished.
The Cabinet of Ministers granted approval to escalate the value-added tax rate up to 18% with effect from 1st January 2024 and impose a said tax on certain goods and services to which the value-added tax is not yet applicable and implement some of the new tax proposals with effect from 1st January 2024, including the imposition of the tax to enable accomplishment of tax revenue and primary balance targets as agreed with the International Monetary Fund.
The cabinet spokesperson went on to note that these changes were necessary to secure the second tranche of the IMF Extended Fund Facility for Sri Lanka.
When the IMF team visited Sri Lanka recently, one of the reasons for the second tranche of the program to be delayed is that the revenue targets not being met by the government. Therefore, the Parliament will have to assure the means of securing the funding to proceed with the budget. We also need to engage in the state financial management process in order to meet the IMF conditions and the other operations of the country. Like it or not, we will have to amend the taxes in line with the rising of expenditure.
Value-added tax was introduced by the Act number 14 of 2002 and is in force since the 1st of August 2002. The VAT Act replaced the Goods and Services Tax, which was almost similar to the tax on the consumption of goods and services. It is a tax on domestic consumption of goods and services. The goods imported into Sri Lanka and goods and services supplied within the territorial limits of Sri Lanka are the subject matter of this tax. The tax is borne by the final or the ultimate consumer of goods and services.
If we consider that there are 5 stages from the point that a particular item is produced to the point that it reaches the consumer, through this, an 18% tax will be imposed on all of those stages. We see this increase of VAT to 18% as an increase of about 125% of the VAT within the span of 1.5 years. This will result in the prices of all goods and services in the country increasing. This is imposed disproportionately in a society. When compared with the rich, the poor will have to pay a higher percentage of their income for this tax. This will result in the poverty in Sri Lanka increasing and the standard of living of the people depreciating.